All right, let's get right into it. Today, we're unpacking a massive quarter from Vital Farms. That's ticker VITL. On November 4th, they dropped their Q3 earnings, and wow, the numbers were seriously impressive.
And you don't have to take my word for it. Just look at how the market reacted. The verdict was instant and it was loud. The stock shot up, closing the day over 16% higher. I mean, a jump like that, that's not just a good quarter, that's a statement quarter. So what's the story here? Well, it's actually pretty simple, but really powerful. Vital Farms didn't just meet expectations, they blew past them. They raised their outlook for the rest of the year and, you guessed it, investors absolutely loved it. So let's get into the nitty-gritty of how they made it happen.
Okay, first up, the headline numbers. This is that classic beat and raise scenario that gets Wall Street buzzing, and for good reason.
And man, what a clean beat this was. Let's start at the top. Revenue hit nearly $199 million. That's not just beating the consensus, that's sailing right past the high end of what analysts were hoping for. And then you look at the bottom line, earnings per share of 36 cents. The street was looking for 30 cents. That's a 20% beat. Just a total, decisive win across the board.
And check this out, that revenue beat wasn't some tiny little surprise. We're talking about record revenue. It's up more than 37% compared to this time last year. That's not just chugging along, that is some serious acceleration. And where's it coming from? Management says it's powerful, sustainable demand from consumers. Shoppers who are more than willing to pay a little extra for a brand they really trust.
It's one thing to grow your sales, but the real magic is doing it profitably. And boy, did Vital Farms deliver on that front. Their gross margin stretched to almost 38%, which is way above what they've been targeting long term. But here's the kicker. Their adjusted EBITDA margin hit 13.8%. That's an 81% jump from last year. That, right there, is what you call the power of scale kicking in.
So numbers like these don't just fall out of the sky, right? This was all about disciplined, heads-down execution. So let's peel back the layers and see exactly how they pulled this off.
This quote from the CEO, Russell DSCo, really says it all. It perfectly sums up their whole game plan. At the beginning of the year, he said their focus was on rebuilding supply, meeting all that retail demand, and setting the company up for the future. And, well, as he puts it, they delivered on all three. Simple as that.
So, how did that strategy play out in the real world? Well, they basically attacked the problem from three different angles. First, they got more farms into their network to get more eggs. Second, they ramped up their capacity to actually process all those eggs. And third, they gave their core systems a major upgrade to handle all this new growth.
And here's the proof in the pudding. They added about 75 new family farms in just one quarter. That brings their total up to 575. They fired up a third production line at their main hub, Egg Central Station. They also rolled out a brand new ERP system. That's basically the digital backbone that runs the entire company. And maybe the most impressive part? They did all of this while keeping their balance sheet rock solid, over $145 million in cash and zero debt. Now that is how you execute.
Okay, so a fantastic quarter for sure, but as any smart investor knows, the big question is always, so what's next? And thankfully, management gave us a really clear and confident picture of what's coming down the pike.
And here it is, the raise part of that, beat and raise. Management is feeling so good about their momentum that they've bumped up their full-year revenue forecast to at least $775 million. Now, for adjusted EBITDA, you'll see it's holding at $115 million, but it's super important to remember they'd already raised that earlier in the year. It's just another sign of strength. And you have to see this in the context of the bigger picture, right? This year's amazing performance is really just a stepping stone. They are on a mission to become a billion-dollar brand by 2027. The key piece of that puzzle? It's their new processing facility in Seymour, Indiana. It's on track, and when it opens, it's going to give them a massive boost in capacity.
The Q&A with analysts after the call was really telling too. Management hammered home a few key points. 1, this growth is the real deal. It's coming from actual shoppers, not just stuffing the shelves at stores. 2, their focus is on selling more stuff to their existing retail partners. And 3, their brand is so powerful that customers are sticking with them. And maybe most importantly, those supply problems they had earlier, yeah, those are pretty much in the rearview mirror now.
So, after all of that, what's our call here at Talk Tickers? What's our take on where this stock is headed?
We're initiating our coverage on vital farms with an outperform rating. And just to be clear what that means, we expect this stock is going to beat the market average over the next 12 months.
So why outperform? Well, our call really boils down to 4 key things. First, their execution is just incredible. Management made promises, and they kept them. End of story. Second, the power of their brand is undeniable. Third, their financial strength is a fortress. And finally, they have a crystal clear path to keep growing. That billion-dollar revenue goal, it looks completely achievable from where we're standing.
So as we look ahead to the next earnings report, what should you be watching for? For us, it comes down to one word: sustainability. Can they keep those amazing margins going as they get bigger? And can they keep this incredible volume growth now that they have the supply to meet demand? The answers to those questions are going to tell us if that 16% stock pop was just a one-time thing or the start of something much bigger.
And of course, just a final reminder that this is not financial advice. This explainer is for informational purposes only.